Hello guys and welcome back to yet another financial accounting video. Today we're going to talk about the balance sheet. So, the balance sheet is a basic summary table which presents the company's financial position at a given time. On the left side of the balance sheet, you're always going to have the assets, and on the right side, the financing side, you're going to have the liabilities and the equity. The right side, the financing side, should always be equal to the left side. Now, we're going to talk about three components of the balance sheet, which are the assets, the liabilities, and the equity. The assets are goods or resources controlled by the company with a positive value, which are expected to provide future economic benefits. There are two types of assets: non-current assets and current assets. For the non-current assets, which are things that benefit the company but are not expected to become cash within this fiscal year, you can find PPE, which is plant, property, and equipment. For example, let's say the land or the building that a company might own, it doesn't become cash in a year. Investments, not expected to be sold in a year. And intangible assets, which are things you can't touch. For example, patents, copyrights, brand name, logo. It will give you value over time, but not right now. So all of these are non-current assets. Current assets are assets that will become cash within this fiscal year. It includes obviously cash, inventory, for example, raw materials or finished goods that are not expected to sell for money within this year. That are expected to sell for money within this year. Prepaid expenses, which is something that the company should have owed in the future but has already paid. So assets are assets because later when they owe something, when they owe the money, they already paid it. Receivables are money that the company will eventually get for something they already sold. For example, if I'm selling a yellow t-shirt to you, the customer, and you're not paying right now, and you're paying, I don't know, in a few weeks, that will be counted as a receivable in my account. And tax credit from VAT. If the company has paid tax for something, they get a tax credit from the government within this year. So it's a current asset. Liabilities. Now, these are debts or obligations that the company owes, what the company has to pay. And it has a negative value for the company. It includes loans, payables, which is the opposite of receivables, so it represents the money that the company will eventually have to pay. VAT payable, opposite of tax credit, and bonds. The equity is the company's net worth, is the amount of money the company's owner has put into it or owns, and it equals the liabilities minus assets. The equity includes shares, net income, and reserves. Net income also is the same thing as profit. Thank you for watching, and if you have any question, don't hesitate to contact me. See you guys!